Okay, welcome everybody. It's the June market update. Market's rip-roaring, peak season 2026. We're going to go through the highlights. Here's your 5-year interest rate chart. Look at how big these moves used to be, right? That's pretty mellow now. It's not moving as much. We're thinking 6.5 is probably what you should expect. If it dips below, it's going to boom. If it goes up, it's going to soften a little. S&P is back on the all-time highs. The war premium is going out of the markets. Crude oil is back in the 70s. This is helpful for our inflation because the price of oil goes into everything we consume, every commodity, food, etc. So to see this easing off the highs is really great for the real estate industry, as this means lower interest rates are likely to follow. MLS data, this is the active listings. These are up month over month. We're at the highest inventory we've seen all year, as is a seasonal trend here. 372, or approximately half of the listings, have adjusted their price, and they have adjusted it by 5.5%. Now, we're going to dig deeper into that on some later charts, but 60% of the homes are selling in that first month. And the ones that sell are the ones that are on the Beacon report data we're going to look at. Those are for closed homes. Okay, median price is up big. Number of closings is up. Still the same 13 days on market for sold homes, and inventory is up a little bit. Look at this days on market chart. Okay, it's more of the same. It's busy. Keep in mind the homes that closed in May were negotiated in April oftentimes. So here we were in the thick of the war uncertainty, and homes are still selling that quick. Because, spoiler alert, people are still living their lives. Buyers are still buying, sellers are still selling. So this is interesting to see. June feels like more of the same here. Anecdotally, typically we see the days on market start to trend back up as we get into late summer, fall. Here's the number of sales. Again, we're in this busy market. It's increasing. Last year we saw sales peak in September, and still be in high in October, and then fall off a cliff into the holidays. Median price point is back up to these high numbers, and it's not just the median sale price, because obviously a lot of homes over $1 million traded last month, but it's the price per square foot as well, which shows us that things are ramping back up. People are getting more excited, and now we're bouncing off the bottom here. It's still a nuanced situation. Not every house is up 10%, but the market is acting like a spring market right now. Sale price list price ratio is super interesting data to look at, because people always ask me, how's the market? It's a tale of two markets. Here's the 0 to 30 days, the people that sold their home in less than a month. 60% of sellers that sold landed in this category. That's the majority. They're getting 99.3% of their list price. So there's not a ton of wiggle room on price the first 30 days, assuming the home's priced correctly. Now, as the home lingers on the market for longer, there's more wiggle room on price. This is 5, 8, 9% discount to the original list price the longer that the home stays on. And what's not pictured in this chart is the homes that did not sell and just canceled. I would say that probably 25% of the homes that list end up in this canceled status and try again next year. Or the homeowners rent it out, or the homeowners decide to stay. Bottom line, the spring boom continues. Green light is definitely on for 2026. We had a little pause there around March, April, where it was a lot of uncertainty. But when you look at the data, the buyers were still buying, the closings were still happening. 13 days on market. It's a spring market. So as the fears subside, we see rates kind of right here in the sixes. There's we're in our fourth year at this sort of 6 to 7 range in rates, and there's a lot of pent-up buyer and seller demand. So if you or anyone is having a situation you want to consult on, myself or any Ben Relo team member would be happy to help.